Hello and welcome to this video where I'm going to be talking about this thing I call a scoreboard. This is something I developed over time just to kind of help give me an idea how well the practice is doing financially. It's important for me to figure this out on a weekly basis. Actually, I do it twice a week to see where we are instead of waiting till the end of the month to just see, well, how did we do? Because I don't want to be surprised at the end of the month. I want to know how we're doing. And so this is kind of a quick way to put together your financial information so you can kind of get an idea where you are in your progress of your practice as far as its financial benefit to you. But before we get into that, let's talk about how you actually get money home to yourself. At least I'll tell you how I take the money home for my practice. I'm going to pay myself in two paychecks. The first paycheck, I'm going to pay myself as an employee, which means I'm going to pay myself just like I would pay any associate that works with me, because I need to know what's my replacement cost. Like if I were to take myself completely out of the practice and put someone else in, I have to pay them to do what I was going to do. So I need to consider myself as an employee so I can see this entire practice and how well it's running. So I'm going to pay myself as an employee. Plus, it tells me how well I'm doing clinically. It tells me how well I'm performing, because we'll see that there are different dentists produce at different levels. Same procedures, same equipment, same philosophy, same everything, but for whatever reason, they produce at different levels. And so I want to know, how am I performing as a dentist, as a clinician? If I were to pull myself out of my office, put myself in another office with a very similar setup, I think I would know how much I could make as an associate. Plus, it gives me a way to kind of measure the effectiveness of any other associates that I have working with me, because I have some kind of way to measure and compare how well we're all doing. Anyways, so I pay myself as an employee, and then I also pay myself as an owner. So I'm an employee in the practice just like everybody else, but I need to see if I'm running this entire office. I need to know how well is the office doing from a profitability standpoint. And so I'm going to take money home in the form of a distribution, which I'll define that here in a moment. But that tells me how well the practice is doing. See, as an employee, I can see how well I individually am doing functioning within the practice, but I need to know how the entire practice is working. And so the distribution tells me how well I'm doing. Another way to look at this, again, I've just kind of said it, I'll say it another way. An employee is going to get paid. I'm going to get a W-2 for my clinical work, but when I am an owner, I'm going to take money out of the practice on a monthly rhythm. Every month, I'm going to pay myself a distribution, and that distribution is money that's coming home to me for owning the practice. Now, what should be the distribution amount? How much money should you take out? Should it just be like, well, whatever's left over, that's what I'm going to take? That is one way, I guess, you could do it, but you should know if that number is good or bad, or if you are in a profitable zone or not. So a quick rule of thumb to kind of give you an idea where you can start with to see if your distribution amount is about where it should be is to take 10% of your gross collections, and that should be it. So if you have $250,000 a month in collections, again, not production, of actual collections, money that made it into the bank, $25,000 in this example should be your monthly distribution that you're taking out of the office. Okay, so now let's put together this little quick scoreboard, or the scorecard I'm going to use. It's a small, easy to use spreadsheet that anybody can put together. It's very basic, it's very simple. I run this twice a week, and it gives me the answer. I mean, within 5 minutes, I can put this information together. I can have my bookkeeper or my office manager put this together, and it gives me a real quick sketch and knowing where we are. Okay, let's start breaking this down here. We have the green area here. This is the stuff, we'll call it current assets. This is the stuff that I'm working with the practice as far as money that I have available to pay bills with and so forth. And then I'm going to have this pink area. This is going to be some of the liabilities, things that I owe. And then down here is going to be the equity, or you can think of this as the distribution amount. But let's break this down into each segment. So checking accounts, that's pretty self-explanatory. You go out, you log in to find out what your checking account balance is as of right now, or you could log into your accounting software, assuming that you are up to date daily on how you're entering your data into your QuickBooks or whichever thing you're using. Okay, but this line right here, unrecorded deposits. This is money that's been collected, money I call it across the counter that came in through the mailbox or credit cards or whatever's been paid today, but just hasn't been recorded yet at the bank. So I need to know what that amount is, because I'm running the numbers for today. I need to know, well, how much money did we have brought in today that just has not yet made it into the bank. It'll make it into the bank tomorrow, but it's sitting on our counter, figuratively speaking, right now. And so I have to figure that as part of the overall current assets. Okay, next. Down here we have credit card balances. Pretty easy. Again, you just log into your credit card company, get the balance as it is of today. How much do you owe in total today? Okay, because all this is being done to know where we are at this very moment in time, this snapshot in time. This thing, unpaid payroll. Okay, this is a little bit more math. I'm just going to have to figure out what your daily average payroll amount is and then multiply that times the number of days since you last did payroll. Okay, so let's just assume that you pay every 2 weeks. Let's also assume that you work 5 days a week. So during a paid period, you're going to work a total, your office is open and you're paying your staff and yourself for 10 days of work. That's how much every payroll period is. So let's just imagine you have an average of $55,000 is your average payroll. Again, you yourself as the dentist, even you're the owner, paying yourself as an employee, you are part of this payroll number. So $55,000 for the office payroll every 2 weeks. And let's say there's 10 working days in each one of those pay periods. And then that equals $5,500 today, per day. And let's say it has been 4 days since you've last run payroll, or last time you had paid, you had your payday. So you're going to take 4 times 5,500. That's how I would get to like this $22,000. This is how much I owe as of today to me and my employees. Me again, considered as an employee, so that I kind of know what my payroll is going to be, how it's going to, when that payday hits. In this example, it's 4 days, so another 6 days from now, 6 working days from now, I know that amount of money is going out the door. I want to know, well, how far along am I as of this day number 4 along this pay period. Okay, moving on to the next thing. These are going to be other places you put in some other, I'm going to call it other major expected expenses that need to be paid within the next 30 days. You can put whatever else you want in here. For example, I just used the example of payroll. Well, sometimes after you do your payroll, you have yet to actually pay your payroll taxes, but you're on the hook for it. So you got to make sure that you account for that as well. You might run a 401k through your company. You know that check is going to be going out the door as well. So these are things I like to just be, I like to have in my account so I can be aware of where I stand financially when I'm putting together this scoreboard, so I know where I am. So in summary, this is the amount of money that you own. This is the amount of money that you owe. And the difference between the two is going to be your distribution. So I said earlier that whole idea that you want to have some sort of goal. So in this case, the goal is $25,000 is how much I want to take out of the practice every month, assuming the practice was doing $250,000 of collections. So as we march along the days of the month, you can kind of just see where that number needs to be. And if we're going to arrive on the 30th day of the month at 25,000, you can kind of see this slope of where it is. So again, in this example, I used $19,000 for the distribution. Well, is that a good number or a bad number? Well, it all depends where we are along the month. If we're at day 11 and we're at 19,000, well, we're way above the line. That's fantastic. But if we're down here at day 28, we're below the line. Still same number, 19,000. But you can tell here we're coming in lower than our expected goal. It's still $19,000. That's great. But just know that if your goal is 25, then you know that you're kind of lacking. The practice isn't doing as well as it could be doing if things were being run better. So the scoreboard, again, it just shows your distribution health on any given day. So any one of those 1 through 30 days, you can check in to just kind of see where are you in relation to that slope. Where are you above it or are you below it? And again, I also want to bring home this point of how you're paying yourself as an employee. That can be limited. I mean, there's only so much that your hands can do with you being a dentist. I mean, there's various production levels per dentist. I mean, you can always improve how well you're doing as far as your speed, your sales ability, or whatever is patients that will agree to follow what your recommendations. All these different things can play into getting that number higher. But you're going to hit a certain ceiling. You're not going to be able to exceed a certain amount working as a dentist. You can only work so many hours a day, and you can only see so many patients per hour, and so that's going to be limited. However, as an owner, that amount of money, that distribution amount, that's theoretically unlimited. You could hire more hygienists. You could hire more dentists. You could open more locations. You could do other things that are going to help build your business so that you as the owner could take home more money in the form of a distribution. And that is kind of at least been my goal, is to build a practice in such a way that my clinical contribution, my employee amount of money, will be smaller than the actual ownership, because this is something that's more sustainable. This is all dependent upon me. This is how well the practice is being run. Okay, now that's kind of it as far as the scoreboard. I do want to add one small piece to this thing for this, we call it bonus material. That's going to deal with savings and how to account for that so you can be a good steward of how you run your practice. And so you're going to take money out of your checking account and you're going to put it over into a couple different accounts. I've just kind of come up with these three. I know in my office, every 3 or 4 years or so, we're going to have to replace all the computers in the office. They just simply have this obsolescence, and I know that they're going to have to be replaced. And so I put money aside. And it may not be $1,500 in my case, but I'm just using this as an example for you to kind of figure out conceptually how you might want to do it. So $1,500 a month, again, monthly savings of $1,500 is going to go every month into a separate account, a separate savings account that's going to be earmarked for computers. I may put another $1,000 a month aside for property taxes. I might be higher, it might be lower, but at least where I live, there's property taxes that are going to be due every January, and I want to make sure I have money saved up for that. So again, I'm not surprised when that bill comes around. And then you might want to just save money just for either a rainy day or for a great opportunity that comes along. So putting money aside and putting it aside until you reach a certain level. And that is a good idea as well. Now that plays into the scoreboard somewhat in that you're taking money out of your checking accounts. Now I said this is monthly. You could choose to have these all come out on the same day. You could have this come out like on the 5th of the month, and this one may come out on the 12th of the month, and this one, you could split it up so that the money is kind of trickling out of your account, so it doesn't just big one amount of money coming out of your checking account all at once, but you could kind of spread it out over the course of the month. Anyhow, you're going to take that money. Remember, it's moving into these savings accounts coming out of your checking account. Okay, so you don't have to worry about trying to figure this amount when you're trying to do, how much you're on the hook for, how much you are expected to pay, because these are going to be expected amounts of money going out. I just simply put it aside, and I just figure this is part of what's happening with the checkbook. So I don't factor that in. But the main point of showing you this is this concept. You are going to have this amount of money sitting over here in your current assets. When you when you run a profit and loss statement, or I'm sorry, when you run a balance sheet, you're going to see a list of your current assets. And so your current assets are going to be your savings account. So I just don't use the savings accounts when I'm calculating my scoreboard, because this is money earmarked for something else. I'm looking at, when I take that away, how much is left over for me to take home, because this is the amount of monthly money that I want to take out of the practice, and I don't want to get that confused or muddled up with the amount of money that's being saved over here. So good idea, save money. Just make sure that you are not commingling it with your scoreboard, because that will kind of throw things off, because this is money you're going to have to pay, or at least it's a good idea to save some money for a rainy day. You just don't want to make sure that you're dipping into this money to try to take it home. If you're having to dip into your savings to take stuff home to finance your lifestyle, something is really out of whack, and you need to reassess what is going on. But anyhow, the whole idea of this whole thing was, of course, the scoreboard. Very simple spreadsheet. Put it together, run it. My rhythm is Tuesdays and Thursdays. I run it twice a week, and it just tells me how well the practice is doing, and it helps guide my decisions going forward. All right, thank you.